Hello, and welcome to the World Battery Metals and Mining News for the 20th of August, 2024. Northvolt's $20 billion battery plan suffers summer of setbacks. Northvolt AB, the ambitious Swedish electric vehicle battery maker, has attracted a hefty $20 billion in investment, but is stumbling over operational and financial hurdles. This summer, it shut down its Californian unit, Cuberg, and moved R&D back to Sweden. Plagued by slow market growth in EV sales, it's also grappling with fierce competition from cheaper Chinese batteries. Production issues at their flagship site, Northvolt ET, near the Arctic Circle, include missed deliveries to key clients like Volkswagen's Scania and a tarnished safety record, adding to its woes. Even with $5 billion in green loans and intent to raise more capital, financial stability seems dicey, as highlighted by the tripling of operating losses to $1.3 billion last year. Leadership changes and the looming cloud over its IPO plans showcase a company at a crossroads, with significant implications for Europe's quest for a local battery supply chain. Argentina to sign deal with US to boost metals mining. Well, look who's finally caught up. Argentina is shaking hands with the U.S. in a bid to attract more investments in its critical minerals sector, primarily copper and lithium, the lifeblood of our electric vehicle fantasies. This shiny new agreement, to be signed during U.S. MICE, under Secretary of State Jose Fernandez's visit, is part of a larger American effort to cut the Chinese umbilical cord when it comes to our supply chains. Argentina's vast untapped resources make it a juicy target. But let's not kid ourselves. Wooing away China's significant influence won't be a walk in the pampas. While this strategic move lets Argentina pitch to a bunch of countries at once, the festivities won't include U.S. Inflation Reduction Act incentives due to the lack of a free trade agreement. Nonetheless, expect a lot of hot air at the upcoming Buenos Aires Forum about the endless possibilities for lithium and copper extraction. In the end, it'll be interesting to see if these high-level talks will translate to actual boots on the ground. SQM profit down 63%, anticipates continued weak lithium prices. Chile's SQM, the globe's runner-up in lithium production, is feeling the sting of a sharp 63.2% drop in quarterly profit as lithium prices nosedive, hitting $213.6 million when analysts expected $296.7 million. Despite record-high sales volumes, the market's lower lithium prices took a toll, with CEO Ricardo Ramos warning the slump might persist. To combat this, SQM is diversifying internationally with investments, such as in Australia's Azure Minerals, creating a new division, SQM International Lithium, to bolster production beyond Chile. The firm's ambitious goal is to ramp up production by at least 100,000 tons of lithium carbonate equivalent a year by decade's end, supported by a hefty $1.6 billion capital expenditure in 2024. This spending includes major acquisitions and expanding both lithium carbonate and hydroxide production capacities, alongside nitrates and iodine operations maintenance. Meanwhile, Chile is staying competitive, opening new lithium mining areas and testing environmentally friendlier extraction methods. Sibanye terminates supply contract for French nickel refinery as it looks to repurpose plant. Sibanye-Stillwater is tightening its purse strings on the inadequate Sandouville nickel refinery in France, aiming to revamp it for precursor cathode active material, PCAM, production for lithium-ion batteries. Purchased from Aramet in 2022, the plant's current financial bleeding prompted a pivot towards utilizing its chloride processing tech for the Gallicam project, which has shown promising lab-scale results and has even led to a novel patent application. This innovative process enables PCAM production from mixed hydroxide precipitate with fewer steps, reduced energy consumption, and lower emissions compared to traditional methods. Sounds a bit too good to be true? But there it is. The decision hinges on ongoing feasibility studies, but despite necessary cost improvements, Sandouville remains a money pit. So the company is cutting ties with costly supply contracts by doling out $37 million. Interestingly, they're pushing ahead with inventory refinements and sales into 2025, with an eye on syncing with the EU's Green Deal and Critical Raw Materials Act. Additionally, they hope to fund this green dream with EU, French, and regional grants. Well, at least they're thinking ahead. even if it's taken a fair bit of financial bruising to get there. Arch merges with Consol Energy to create U.S. coal export powerhouse. Well. Arch Resources and Consol Energy, the coal industry's dynamic duo, have decided to tie the knot in a $2.3 billion merger to form Core Natural Resources. Despite coal being the fodder for every climate doomsday narrative, these folks are banking on its everlasting demand for power plants and steel making. Arch's shareholders will get Consol stock, with the latter's folks owning 55% of the unified entity. Sporting 11 mines and a hefty export capacity of 25 million tons annually, the new Colossus aims to dominate seaborne markets, irrespective of regulatory humdrum. Their combined shipping prowess, especially in exporting metallurgical coal, is sure to put them leagues ahead. This merger could just be the opening act in a series of strategic moves, though it does make one wonder if they're pinning their hopes on overseas markets while domestic demand wanes. While Arch's previous merger attempt with Peabody Energy sank in legal waters, this one sounds more promising. Investors seem optimistic, bumping stock prices slightly despite this year's overall decline. Someone clearly believes there's still black gold in them hills. Chilean court orders halt of union roadblocks at Caserones mine. A Chilean court has ordered the union at the Caserones copper mine to stop blocking access roads after a week-long strike by some 300 union members, representing 30% of the workforce, disrupted operations. London Mining, the Canadian owner of the mine, filed the complaint in Copiapo court, arguing that the blockades and unauthorized bus inspections hinder non-striking employees' freedom to work. The court's ruling mandates that the union cease these activities, underscoring the tension between workers' right to strike and operational continuity. Both the union and London Mining have yet to comment, with no resolution to the dispute in sight. This interference with worker access to mine areas could seriously impact not only productivity, but also the technological efficiency of operations, which I, with 30 years of industry experience, find concerning for the future sustainability of such projects. Asteroid miner AstroForge readies third mission for 2025. AstroForge, a US-based startup, has raised $40 million for its third mission in 2025 to mine asteroids for precious metals, aiming to address Earth's dwindling resources. In the spirit of plucky entrepreneurial ventures, their upcoming missions, Odin and Vestri, will ambitively target a near-Earth metallic asteroid. Vestri, a 200 kilograms probe equipped with magnetic docking capabilities, aims to return with valuable materials. While their first mission hit technical snags, the company remains undeterred, with plans to refine asteroid materials in deep space and establish an alternative supply chain of raw materials. This initiative echoes the failed ambitions of predecessors like Planetary Resources and Deep Space Industries, but AstroForge believes their cutting-edge technologies and persistent optimism will drive significant industry advancements. If successful, they promise a market potentially valued in trillions, heralding a new era in space mining. Codelco invests in EVs, cacti as part of green makeover. Codelco, the Chilean copper behemoth, is trying to polish its green image due to increasing global demands for sustainable mining, albeit with some token gestures. The company is putting its efforts into electric buses, cactus nurseries, and recycling projects, particularly at its El Teniente mine, the world's largest underground copper mine. While such moves might seem like a publicity stunt, they are crucial as clients are no longer satisfied with traditional methods. Certifications like the Copper Mark are becoming increasingly significant. However, the actual environmental benefits appear limited, as the industry remains water-intensive and produces waste with heavy metals. Efforts such as deploying 100 electric buses to cut 3,000 tons of CO2 annually and recycling metal materials, although costly, are steps towards making processes more efficient. Additionally, a collaborative initiative with the government aims to regenerate areas damaged by mining through planting 1 million native plants, including endangered cacti. While these projects might seem minor, they represent a starting point for cleaner mining practices. Sibanye finalizes a $101 million gold prepayment deal, refinances credit facility. Sibanye-Stillwater, a diversified South African mining behemoth, has inked a hefty 1.8 billion rand, $101 million, gold prepayment agreement to shore up liquidity and repay loans after the dismal slump in platinum group metal (PGM) prices took a toll on its income. Aiming to raise over $500 million, this move offers a strategic lifeline. Metals prepayment deals, essentially forward-selling future gold production for upfront cash, will see the delivery of 1,497 kilograms of gold from October 2024 to November 2026. Further, Sibanye has renegotiated and expanded its 5.5 billion rand revolving credit facility to 6 billion rand, pushing the maturity to August 2027 with an additional extension option. Kudos for some pragmatic maneuvering in murky waters, though one must wonder if the floundering PGM prices are actually cyclical or just part of the brutal mining game. Brazil Potash plans IPO to finance $2.5 billion Autazes project. Brazil Potash is planning an IPO on the New York Stock Exchange to fund its massive $2.5 billion project in Amazonas, Brazil. The company aims to attract global investors by leveraging U.S. market conditions that are more favorable due to expected interest rate reductions. The raised funds will support critical engineering, testing, and permits for their Autazes project, which could substantially cut Brazil's potash import dependency. Though production is eyed for 2026, the project has faced delays due to indigenous Mura people's opposition over inadequate consultation regarding the use of their lands. The brainiac idea here is to build Latin America's largest fertilizer mine amid the Amazon, which surely won't stir up any environmental or political squabbles, right? Toubani earmarks $10 million injection for Mali gold project. Toubani Resources has successfully raised $10 million in a two-tranche placement to advance the Kobata gold project in Mali. The first tranche garnered $7.2 million through the issue of 42.2 million shares at 7 cents each, expected to settle by late August 2024. The second tranche aims to raise $2.8 million pending shareholder approval in October 2024. The raising price reflects discounts compared to recent trading prices. Canaccord Genuity and Wallaby Group led the placement, with Euro's Hartley's assisting. The funding is slated for the completion of the definitive feasibility study, in-country agreements, and permitting, as well as advancing environmental and social activities to make the project shovel-ready. Additionally, Toubani will pursue further drilling to explore high-priority targets. Managing Director Phil Russo expressed gratitude for the investor support, highlighting the project's potential as one of West Africa's largest oxide gold developments. Readies, an Australian fund manager, has also committed to a major stake. Despite my skepticism about the environmental craze, it's refreshing to see mining companies take a rational approach to development without compromising on thorough planning and shareholder engagement. O3 Mining upsizes bought deal to raise $13 million due to strong demand. O3 Mining has ramped up its public offering from C15 million to C18.15 million, capitalizing on strong investor enthusiasm. The company will issue 16.5 million units priced at 110 cents each, with each unit including a common share and half a warrant exercisable at 145 cents within 2 years. The underwriters may also purchase an additional 2.5 million units, potentially adding another C$7 million to the pot. Funds will bolster O3 Mining's activities in Quebec, notably the Marbon Alliance, a 2,189-hectare property with a storied exploration history. Projected to yield 161,000 ounces of gold annually and rake in $668 million in EBITDA over its initial 2 years. At a gold price of $2,400 per ounce, the Marbon Alliance aims to sustain a 10-year mine life. It seems the investors are digging up more than just dirt here.